Yeah, sometimes if you have more efficient equipment, quicker equipment, equipment with a bigger capacity, sometimes that can change the gross margin in an executive summary, changing the entire metrics of the business plan.
I can see the whole wide world with these two eyes, and I can be whoever I wanna be, 'cause it's my life.
Hi, thanks for tuning in for another episode of Ask Spurrell CPA. Today, as the Edmonton business consultant, we're talking about the business plan, equipment, and software section. I have Denise here with me again. Denise, did you have any fun this weekend at all?
I did.
Yeah, what did you guys do?
Do you know I went to a 4-year-old's birthday party at the John Jansen Center?
Oh, really?
And I learned the most interesting thing about woodpeckers.
Really?
Yeah. So woodpeckers have a tongue that's as long as they are.
Really?
And they use it to wrap it around their brain so their brain doesn't get damaged when they're pecking for insects.
It has an anti-concussion device
It does,
in
built
the
right in.
Woodpecker's
Isn't
tongue,
that-
which you wouldn't know, right?
That's right. And you'd
Right.
only find out by asking Spurrell.
Not just
No,
accounting
maybe
questions.
not, but that's right.
We're finding, we're finding animals with the longest tongue per
Yeah,
inch. Yeah, there
that's
we go. So the quote that we have here today, it's a Jim Collins quote, author of 6 business books, and he says, "Thoughtless reliance on technology is a liability." And the statistic that we have are 50% of all Canadian small businesses will go out of business in the first 5 years, and 29% of these failed businesses will list running out of cash as one of the primary reasons for failure, making running out of cash the second most common reason for business failure. And the story that we have, Denise, the one that we see is most business owners' plans don't tie the equipment and software into the rest of the business plan specifically. So in order to do that, in order to tie that equipment and software into the business plan, Denise, what are the questions that these business owners should be asking?
So one of the questions is, can equipment and software change the margins in the executive summary?
Yeah, sometimes if you have more efficient equipment, quicker equipment, equipment with a bigger capacity, sometimes that can change the gross margin in an executive summary, changing the entire metrics of the business plan. You know, how much a customer is worth, how much you can afford to spend on them in the sales and marketing plan. So, really understanding how that equipment and software affects the gross margin, so the revenue and the direct cost of sales and the gross profit margin thereon is important, and it should be considered when you're devising that executive summary.
And can equipment and software help differentiate you from your competitors?
It is. Yeah, equipment and software, we're always looking at ways that we can differentiate us ahead of our competitors. And sometimes having a piece of equipment or utilizing a piece of software can be that differentiation factor. I mean, it could be as simple as you have a piece of equipment that you're the only one with that piece of equipment. Your competitors just don't have it. So if you have that type of project that requires that piece of equipment, you're the only one that can do it. If that's the case, you want to identify that, even if you're not the only one, but you're one of a few. That's something you want to get out in front of your customers often, so it can be one of those differentiation factors, and that might guide what marketing strategy you're going to have or the price points that you're going to charge. So you really should consider if your equipment and software is significant enough that it can differentiate yourself from your competitors, or sometimes you think it differentiates yourself from your competitors, but everybody else has it and they've caught up to you, and then you have to focus on something else.
Right. So should you be specific about the cost of new equipment in the financing section?
Yeah, so you need to be really specific about anything new that you're going to buy. Software is tough to get financing for, but often, a lot of times software these days has monthly plans. Most people are selling software as a service, as SaaS type products. But when it comes to equipment, you want to be really specific about how much that's going to cost, because the banks won't lend on a potential. They want to lend on an actual. They want to say, hey, this piece of equipment costs exactly $109,817.54, and you have a quote from a particular supplier to do it, and you want to finance 80% of it, and you're putting up the other 20%. That sort of level of specifics in your financing section, because the banks won't fund on estimated amounts for equipment.
So is available equipment and software a consideration in the market trend section?
Yeah, so you also need to look at it if other people are buying equipment and they're buying software and implementing software or automating their processes. Sometimes that's an advantage that you're going to need to catch up to. Sometimes it's a detriment and they're overly automating things that they're better with a personal touch. We see that a lot too, and Jim Collins outlined it well in the book. Thoughtless reliance on technology as a liability. So that it can work both ways, but the key is you want to understand the trend. Where are the rest of your competitors going? Is that something that you need to catch up to? Or maybe they're going in the wrong direction and they have a little bit too much technology in the process and it results in an inferior product. That should be considered in the market trend section for sure.
Is equipment and software a potential differentiator in the competitor section?
Yeah, so don't just think about the equipment that you have. You need to think about the equipment and software that your competitor has, because that might be their differentiator. And if their differentiator, if they're the electrician with a picker truck, maybe you should be running the Christmas light special with installing lights on 100-foot trees and trying to do it with your ladder and compete on price with them. So you have to really understand not just what you have but what your competitor has, because that might dictate what your differentiator should be, because you don't want to be competing in an area where you're outgunned, so to speak.
Yeah. Is a description of critical equipment and software part of the operations section?
It should be. Yeah, that should be part of the operations section. Here's where you start describing what that equipment and software does, so you can communicate that, and you have that specific operations section carved out for that purpose.
Should you assume that lenders have no knowledge of industry-specific equipment?
Yes, you are. If you are a plumber explaining equipment, pretend you are not explaining it to another journeyman plumber. And heck, you're not even explaining it to your accountant who has a mild understanding of construction equipment. You're explaining it to a banker who has never set foot on a construction site for their life, and they've never swung a hammer, and they've hired someone at every stage of their life. So you have to understand that sometimes you need to describe this stuff at its lowest level. You're not explaining it for another professional in your industry. You're explaining it for people outside of your industry. So your accountants like us can give you good strategy. And a lot of times that good strategy is, if we understand what the equipment is for, we have, construction professionals in other industries, and you might have an electrician with a piece of specialty equipment, but we know how to highlight that piece of specialty equipment in a sales and marketing plan if we can understand it. And sometimes you're just explaining it so the banker on the other end will actually give you the loan, because if they don't understand what it is, they might not finance it for you.
Yeah. So should the purchase of new equipment or software be in the Milestones section?
Yeah. So when you think about purchasing the new software or equipment, usually these are major purchases. These are tens, if not hundreds of thousands of dollars. So we need to put it in the Milestones section, because even if you have the money and get the financing to do it, it's going to be a while before that equipment arrives or gets installed or gets assembled. So we don't want to do the projections based on something that's going to happen in the future. We want to do the projections on the current state of affairs, and once that equipment gets laid out, it could be different, right? So we really want to have that purchase of new equipment in the milestone section, because often it's stuff that you have to order, wait for, install. It doesn't happen right away.
Should the financial projections generally change once a new purchase is made?
Yeah, so as soon as you get that new piece of equipment, now a lot of times maybe you can change your pricing, maybe you have more capacity because of that new equipment, but often you also have a nice new fat loan payment that goes along with it as well. So you got to make sure that we have the cash to float it. And as we know, sometimes just because we increase the capacity doesn't necessarily mean we have money coming in right away. Generally, we have to increase the capacity and wait for revenue to increase up to that capacity slowly over time. So a lot of times we have to have enough cash put away that we can make the loan payments on the same amount of revenue, rather than just hope that revenue is going to pop overnight as soon as that new piece of equipment arrives.
Will equipment sometimes present a capacity constraint in the projections?
Yeah, so a lot of times when we're looking at the equipment and software, let's pretend we're keeping with that existing equipment or software. We need to know what the capacity of that equipment and software are. If we're dealing with something with a CNC machine, and it can only cut so many units per hour. Well, we can never sell any more than what that machine can cut unless we buy another machine. So we need to understand those capacity constraints, and a lot of them are the size of the location you're in, the hours that you're in, and the equipment that you're using. So we need to know what capacity constraints goes along with that equipment, because that will often be the upper limit of the revenue projections. And if we project beyond those capacity constraints, they're just wishful thinking. Yeah. They're not an attainable figure, right? And we can't hope that cash is going to come in. We need to plan on a reasonable amount of cash coming in. So I think that's what we have here today. As always, please hit that like and subscribe button so we can continue to deliver you tips on how to beat the odds at business. And if you have any questions or comments, we'd love to see them below, so we can respond back to you and use any ideas that you have for future videos. Thanks very much.